Apple's up more than 6% right now. Google about 3%, but Dell, Intel, Research Motion, and Microsoft are all to the upside. Look how strong.
Did not disappoint. 400 points higher. Yes, indeed. The markets roar higher last 30 minutes of trading as volatility once again rules the day.
Most of the techs this morning, if not all of them, have just exploded to the down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it because it's so horrible.
But we've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
This market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices so fast, so fast.
Seconds to go until the start of trading at the New York Stock Exchange, and stocks are set to kick off lower, a whole lot lower.
eBay is down 6.5%, and really you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
The World Health Organization raising its global risk assessment for the coronavirus's spread and impact to very high, the same level as it's had for China since late January.
The advisor said as of this morning, the White House still believes that the threat of the virus in the United States is low, despite what you heard from the World Health Organization globally in that.
Yes, Scott, and it's not just this correction where those powerful rallies that sometimes come after an intense decline are not necessarily trustworthy. That's the nature of these very sharp pullbacks. Take a look at the S&P 500 over the last 3 years to put this drop in some kind of context. We've been talking about this is the fastest 12% loss in history measured.
Laboratories as a part of the U.S. response to be able to monitor this new epidemic that's really becoming a pandemic pretty quickly.
Cessation in ticks on the S&P. That means the first circuit breaker
for whom the bell tolls
has been triggered.
Federal Reserve cutting interest rates by 50 basis points, making a surprise announcement of a 50 basis point rate cut. The Federal Reserve saying the coronavirus poses an evolving risk to economic activity, though the fundamentals of the U.S. economy remain strong. The statement.
The equities down and down hard. Thursday was the biggest drop since 87. Friday, the biggest pop since 08. And guess what? We're back down with futures limit down going into the cash open. In the equity market, we open up with the S&P 500 down around about 8%. And that is where we will pause now for around around about 15 minutes. We'll open back up. Your next circuit breaker will be around about 13% lower. We're
getting lower by more than 8%. Of course, that greater than the 7% level that triggers the level 1 circuit breaker. That means we will not trade again until 9:45. We will see if we can come off of those lows. Same for the Dow.
We saw our third trading halt in just 6 sessions right at the open, a 15-minute halt with the S&P down 7%. Now, like the 2 other halts, it did produce a brief
witness today. That was brutal.
Obviously brutal. I mean, the markets rushed toward a place to say we have to start handicapping the probabilities of a recession in this country.
The moves in the bond market do not make sense. I mean, there's no way the U.S. 10-year note should move 0.5% in a day, let alone 28% in one day. Now, for weeks, I think it's somewhat of a fool's errand to try to do that now, although, as a lot of people have mentioned, that December low is obviously right in the crosshair.
There I hear the opening bell, of course, ringing for the New York Stock Exchange. Empty floor. Trading will be as normal. The NASDAQ as well, of course.